What up, everybody? Welcome to the watch list of October 20th. But you know, this is always way more than a watch list, way more than a watch list. First part of class, we're going to talk about some technical analysis, some gems that we could take from last week's price action so you could take better advantage of the upcoming week's price action. And then we'll talk about what we expect next week. And as you know, at BTSMC, we call it before it happens here. As y'all seen, we be calling the market out way ahead of news events and stuff. It's getting kind of creepy, right? It can't be a coincidence every time. So with that being said, let's get into class. So last week, man, last week, I left you guys right here. On the hourly chart. What time is class? Class is 6:30. This is a 8 o'clock candle. So we were somewhere right here. We were actually on this red candle that my mouse is on. And the plan last week, I said, well, I'm looking to see if overnight we could use this BISI to run higher. And I said run the highs of September 26th. And then what was the plan after that? I said after September 26th, after you run those highs, I'm expecting us to come back down hard, right? Come back down hard. And I drew an arrow like that. All right, so that was the expectation. So we about to see how that played out. So obviously we used the BISI like we said, we pushed up, and then we start consolidating. Okay, so we had an initial drop here on Monday, 10 a.m. reversal, initial drop. You know, price comes into this BISI, high probability BISI if you want to move higher. Now the thing is, this BISI here is high probability if we're bullish, right? And so when we react to it, what you want to see shortly after is you want to see BISIs developing after tapping into one. Remember, we talked about true bullish sentiment is not just tapping into a fair value gap, but shortly after making more fair value gaps. And what's the expectation? The expectation is to run out the previous highs with a level of energy that shows that, oh yeah, the market has a higher bullish objective. So when you see this staggered, creepy move come out of it, and then we start consolidating and we go backwards, that's a bad sign. So once I seen that, I was like, okay, we're definitely going down. And another secret is, to be honest with you, to be very, very honest with you, we should have never came back to this BISI in the first place. Like, there's further highs to the left, right? These right here are the all-time highs on NASDAQ. So to be honest with you, when we broke out of this range, we were in this range for quite some time. When we broke out, I talked to y'all about when we first break a consolidation, ideally that fair value gap that breaks a consolidation on true strong moves, it doesn't get traded back to. We don't want it to. And if it does, you know, we could use it. Don't get me wrong. When it does, you need to use it. But the ideal delivery is for price to break out and now use that fair value. So when I seen price on the hourly come back to it in the first place, I was like, that's sus. And then when I seen the reaction that it came, I was like, oh yeah, we gonna break down. This is not real. This is not a real rally. And I love the fact that it was a failure swing. And so my expectation at this point is we either have to come down hard right now or we're gonna consolidate. Once I seen us not come down hard, right, and we started consolidating, I said, okay, cool, low probability area. And this is the day where I told y'all that you should set a price alert under this green wick, because under this green wick, we're gonna come down pretty hard. Understand? So now you guys understand the plan heading into the day we about to go over, where we're already suspect on upside. As I told you the reasons why we're suspect on upside. And on top of that, why is our price alert down here at the bottom of this green wick? Because if we're bullish, we shouldn't come back under this low, because this move right here accomplished what we would have needed to accomplish to move higher. Tap it into this BISI to move higher. There's no need to come back down again. There's no need for that, literally. And we already, like I said, don't like the fact that it came to that BISI in the first place. Why are we in that fair value gap in the first place? We ain't like that anyways. So that being said, we know we gonna drop off. It's just about when. So let's dive deeper into the price action. Oh, and let me show the 4 hour for a second. Actually, I already accomplished what I wanted to see on the hourly. We're fine. I mean, that's what the 4 hour looks like. If y'all curious, that's what it looked like. But I said what I needed to say on the hourly, so my fault. Let's get to the lower time frames. You can see 5 minute consolidation here, really choppy opening range. And so even the first half hour of the market, y'all can see it was choppy. So looking at conditions beforehand and saying, okay, guys, this area is going to be a low probability area, allows you to avoid chop. Okay, now what do I look for to tell when chop is finally starting to break down? When is chop finally about to, when are we going to start trending again? Well, there's a rule we say that you've heard me say. When we are bearish PD rays work consistently. When we're bullish PD rays work consistently. What the heck are PD arrays? I got new people every week. PD arrays is premium discount arrays. What are you talking about? I got you. Hold on. Let me break it down some more. So these are areas in price action that we're looking to either go long on or go short on, largely. For example, let's go back to the hourly for a second. For example, this fair value gap right here will be considered a PD array. Say, okay, this is a bullish PD array. Why? Because it's something we expect price to come to and use it to go bullish with. So it's a bullish PD array. That's it. So a fair value gap is an example of a PD array. An order block is an example of a PD array, for example, right? So there's more PD arrays, but we're not getting all of that today. So cool. So my point is, bullish PD arrays work when we're bullish and bearish ones work when we're bearish. So when we're consolidating, nothing works. And that's why I tell you how to stop trading chop, because you're trying out PD arrays in a moment where the market has no intention on going anywhere. So how do I know when the market has an intention on going somewhere? When all of a sudden PD arrays start to work out. That's how we know. Copy. So let's move then. Let's move then. So same concept I was talking about before. These white lines that I drew here mark out this internal consolidation. So how do I know when this internal consolidation is ready to break down? When we put a fair value gap under the consolidation, 1, and 2, I'm looking for PD rays on the inside. So this red candle that my mouse is on, that's 9:30, right? That's 9:30. Over here is 10 a.m. Well, 9:59, my fault. This is 9:59. So you can see that the opening range, which is the first 30 minutes of the market, the opening range was dirty. We don't like it. Bad work. Don't trade this. Who wants to trade this? Not me. Not I. All right. So what I'm doing now, I'm looking to see order flow. Okay. So price still chopping. Now, okay. It's getting a little interesting, right? Okay. We showing some movement towards the downside right now. And we're gonna continue to watch for order flow. So a couple things. What I like here is the fact that we lost these lows. Let's put a horizontal line there. You see these lows? We lost that with a fair value gap that didn't get revisited. That's a good sign. To me, my eyes are open with that because we put a low in the market, a lower high for real. And then we're putting a low in again with a fair value. That to me puts my eyes open, but that doesn't mean I have to take a trade. We still in between the white lines. And by the way, I'm on a 15-second time frame. So right now I'm just diving deeper into the candles to get an indication on order flow, because the thing is, we start determining order flow from the bottom time frames on up. So we may be chopping at first, the 15-second starts trending, then you notice it on the 30-second, then on the minute, then you notice it on the 3-minute and the 5-minute and the 15 and the hourly. All of a sudden, y'all noticing the breakout on the higher time frame. So I'm getting deeply into these lower time frames to notice when is order flow starting to show me price is ready to move. And you have to be careful with this. And I wouldn't take more than a couple trades on the inside of consolidation, but once again, only if I like the way order flow is looking. So if you notice, I mentioned order flow a lot, and I go deeper into order flow in the mentorship, how to really recognize what true order flow looks like. But I give you guys, some hints of it based on me just saying, like, I look at PD arrays, how PD arrays are working, but largely the order flow is a deep topic. But if y'all can notice, I'm mainly a person that talks deeply about order flow more than I do market structure. I don't trade traditional market structure, which is looking for lower highs and lower lows and higher highs and higher lows and supply and demand and all that other stuff. Is not something that you're going to get from me. I get in plays a lot earlier than people who trade that. a lot more accurately than people who trade that. That's why we call it before it happens. That's why the chart debates, you can see my mentees getting the chart debates all correct. Even when market structure is technically bullish, you see my mentees say, oh no, we're bearish right now, because we know about order flow, we know signatures and price action. So I want you guys to open your mind up to the fact that market structure is lacking certain concepts of true market objectives. The market trades for specific reasons that the concept of market structure does not address. And that was my issue with market structure. I'm like, dang, they don't even cover this concept. Like, just because we close under this low doesn't mean we bearish. It's still, price is still doing blah blah blah. So my point is to open your mind up. So anyways, order flow is bearish here. I like this not getting revisited. So now when I see price tap into this is a bearish order block, by the way, this green candle. And then you have the bearish fair value gap right here, confluences. This is something to take a trade on, right? So you can see how we go short here. So I try my shorts out. And then we're also losing this consolidation. Things look good. And, price starts to break down. So as we getting closer, we're getting closer to where I told you guys is safe for a price alert. Let me zoom out for a second. I don't want to, let me make this less crowded. Quick. Right, it was the white line. The white line. Y'all don't need this yellow line no more. Actually, I'll keep it there for now, just in case I need it later. We don't need this no more. We don't need this no more. And let's keep it moving. So basically, the white line is where I told you guys to keep a price alert, because I said once we lose the white line, the market's going down hard. Okay, so you see right now we're catching this breakdown. Now I caught a nice drop here, and I don't remember my exit, but I didn't hold all the way through here. I ended up getting back in. Okay, so likely somewhere in this area, maybe when I would have, knowing myself, right? Knowing myself, I would not want to see price invalidate this fair value gap. So knowing myself, I probably got out right here. And then I would have to get back in because price ended up breaking back down. So, price ends up, well, first of all, consolidates at first. So good exit to me. I'm cool with that exit. But yeah, then when it breaks down, knowing myself, I would probably got back in here. But this is what on Tuesday. Yeah, that was 5 days ago, and I trade a lot, so I don't really remember exactly. But and usually I have pictures for y'all every week, but this week I didn't take pictures on this. So either way, we breaking down. We breaking down, and look how we lost that white line. Look how we lost that white line. This is what we want to see. Look at the 1 minute now. If you don't trade the 15, that's okay. Look at the 1 minute. Y'all see how we lost this with fair value gaps that never got revisited? Great place to go short, right? Great place to go short. Yeah, great place to go short. You feel me? So it's important to know, if you're a breakout trader, if you understand where in the market are the important places for price to lose, or for price to go above, rather, if for bullishness, it can help you be a better breakout trader. I'm not a breakout trader per se, but I understand when a breakout is legitimate. So a lot of people that trade breakouts, they just say, oh, if price goes above this high, we're going long. If they don't have significance to this high, if they don't know the significance of this high, they're just taking any high or any low, long or short. You know what I'm saying? Just because it's like, oh, it's a high, we broke a high, so let's go long. That's gonna get you killed. That's gonna get you shattered. And that's why, if you are a breakout trader that does that, you may have inconsistency because you don't know the highs and lows that have relevance in the market. Now, that's one thing. I wanted to say this. I'm glad I came back up here by accident, actually, on the 1 minute. I remember when I was looking at this, I was like, I want to tell them this tip, and mentees pay attention too, because this is a signature here that I'm gonna share with everybody. But mentees, I don't remember exactly telling y'all this signature. I'm put y'all on with this one. Like, if you peep a consolidation where at first, which is, by the way, let me highlight it. This is a consolidation right here, the purple area. Okay, so we attempted to lose the purple area here with this green candle. Price came back up. All right, if this is a true sweep, right? If this is a true sweep, price needs to continue higher. Obviously, that's what a sweep would look like. So if we come up for a second, but then we end up breaking back down, when we lose this low, let's put a yellow line so y'all know what low I'm talking about. When we lose the low of the green candle right there. Y'all following? When we lose the low of the green candle that tried to break consolidation. So we came back up, came back under it. Okay. Price should not come back above this green candle. So a trade idea for the breaking down of a consolidation, if it looks like this at first, we'll be going short here with a stop loss right above. You know, just this. And every time frame is the same thing, whether you do this on a 15-second or 1 minute or the above, because in mentees, you guys may understand the why to it. All right. So mentees, I want you guys to think about how we've been talking about healthiness. Okay. So at this point, there's literally no reason at all in the world for price to come back above that green candle unless we're about to go bullish again, or unless we're just literally consolidating still. But if price is ready to move, once we come back under the green wick, we need to just break down straight up. So I was looking at this on a 15-second at the time, but even if I was watching it on the 1 minute, the green candle would have been annoying. I'm like, dang, I wish we made a fair value gap. But coming back under the green, like, okay, we bearish then. Because if we were just sweeping, we would have kept going higher. Okay, so and where's your defined stop loss? Your defined stop loss would be based on price not needing to come back above this green candle. Okay, and as you see, price did exactly that. And it's then immediate rebalance right there, breaks down, and we continue. Okay. iPhone says, so for folks trading on a 15-minute or higher, we would have missed this trade. Yeah, I personally think, like, the thing is, I trade on all time frames. I always tell people that all my trades are based on objectives. To determine a market objective, I would need to know what all these time frames are doing, because they work in unison. It's a very beautiful story. So, like, if y'all peep, I didn't take you guys right to the 1 minute or the 15-second. Y'all seen how when we started this lesson, I started you guys off on the hourly and on the 4 hour. And I told you why I could tell we're going to go short. And I'm not saying it in hindsight, because this is something I told you guys since last Sunday. This play is happening on Tuesday. So I already got my analysis based on signatures I saw from the hourly and the 4 hour. I already know we're gonna go bearish. So even when price is going sideways, and I'm like, oh man, I hate chop. Yeah, that's fine. We don't trade chop. When chop is over, it's gonna go down. You know, we just waiting on our moment, basically. Like, when is chop gonna be over? Because I know we going bearish today, but when are we going bearish? That's why we watching, like I said, order flow and everything. And you see, as price started to break down, I told you a couple different ways you could have entered before price actually broke down. And it's just, you can see this is what bearish order flow looks like. Look how any retracement, we retrace it into what? You know, bearish PD raise, bearish fair value gap there, break it down. This is just like some consolidation right here. But, you know, my point is, and then we chopped for the rest of the day. I remember we got out and we was like, all right, we gonna chop for a while. I remember I was done in here, as my mentees know, because I'm updating them. Like, yeah, I was done for a minute. And then as the market I don't know if you remember Tuesday. I know it was like 5 days ago now, but it chopped from literally, as you see here, 1040. I was done in here because I anticipated the chop. Why? Let me explain that for a second. Okay. First of all, these wicks, we expect a reaction in them. That's all I'll say to that, right? But I'll say something else. Even if you're just looking at it on because y'all know, man, I be trying. It's a struggle in my heart. I'm like, dang, should I say this? Should I say that? But I give you guys a lot, so you can't be mad at me, because I give y'all a lot every week, a lot. My free stuff be more than people's paid stuff, so can't be mad at me. But I would say this. Another thing I can tell you guys is, we have this yellow line as a sell side objective, right? You're looking for price to come under this. As if you're learning liquidity, they always talk about relatively equal lows and relatively equal highs. So as you see a pair of relatively equal lows here, right? They're pretty. Okay, cool. Now, when price is this close to a clear liquidity objective like that, bearish PD arrays that are close by will work. And if they don't work, you're probably not about to run that liquidity target, at least not yet. Doesn't mean you're not gonna run it ever. It's not ready. You might have a deeper retracement. You might consolidate for 5 hours before going for it. But the point is, it's not ready, because if it was ready, guess what would have happened? That would have happened off the rip. This green candle would have been something to reject on as a continuation order block. We would have used this green candle to take us lower right away. So it would have been like boom, boom, straight like that. So once price came up, y'all see why I went cash. Like, okay, I'm done. Made my money. Clearly money was made, right? Made my money. Told my mentees I'm done. Boom, I did what I had to do, did some business stuff, went to the gym. At the gym now, I'm looking at this. I'm like, all right. Told the mentees in the chat, I don't know why you guys are surprised. When price breaks down, I don't know why you guys are surprised, because based on objectives, you already know, like, you know, price is going to run this yellow line. There's no guessing. Price will run that yellow line. Doesn't mean it's tradable. Doesn't mean you have to stay around and trade this. No, doesn't mean you have to do that, but it's going to go there. I chose to just watch it happen. I'm at the gym watching it happen, but there should be no surprise, because I want you guys to understand that price is going to accomplish the objectives it has to accomplish, whether you like it or not. And it doesn't have to be in the manner that you like it either. So I told you guys about last week how what we want to do is not, man, did I say this to mentees or free community? But I'm going to say it to y'all anyways. We don't want to marry destinations. We want to marry delivery. I'm going to say that 2 more times. We don't want to marry destination. We want to marry delivery. We don't want to marry destination. We want to marry delivery. If it was my mentorship Zoom, y'all know I would repeat it 10 more times just to annoy y'all, but I'll leave it at 3 total. So what I mean is the destination is the yellow line down here. That's the destination. But if the delivery is like this, right? You just leave it alone. Don't marry. Oh, I know we're going to the yellow low. But like, bro, it's going without me. Oh my gosh, this trade is going without me. Yes, get used to it. Because when you get certain knowledge, you're gonna always know where price wants to go. Does that mean you have to be a part of the trade? No, not at all. Not at all. And so I know we going to the yellow. That's obvious. It's obvious. But you getting caught up in here, giving everything you made on this drop, you gave it back in the chop. Everything you made on the drop, you gave it back on the chop, because you're marrying a destination, not marrying a delivery. So if the delivery is not delivering, you need to stay out, stay cash, man. Stay cash. I'm trying to tell y'all. Understand? And oh, y'all said I shared it with y'all previously. Okay, good. Y'all, and yeah, 1242. It helps me out. I tell myself that, like, you know what? It's not delivering how I want. It's cool. Y'all can have it. Y'all gonna get there without me. You know what I'm saying? And eventually, after 50 hours of chop, yes, they get to the target. But this is why we don't even like when delivery looks like this, because typically when delivery is like that, after running the target, they're probably gonna come right back into the range, because we wouldn't have moved like this largely if price was gonna go super bearish. You understand? So, you know, you can kind of see what price does after. That's the end of the day, by the way. Ended right there. This is the after hours, and then, you know, lo and behold, y'all about to see what happens next. But you know, that's how you could have caught that drop at least. And so that's Tuesday's price action. And Mary said, and you get stopped out trying to go to the target. Exactly. That's what they like to do. They want to stop you out 5 trillion times just trying to get this little target because you're marrying a destination. It's like, destinations is not loyal. I'm trying to tell y'all. Delivery is your best bet. Signatures be your best bet. Always. All right, so that's that. This is this. I'm just trying to clean this up so we can move on to the next play to break down. We don't really need that no more. Neither that. Okay, so let's see. All right, so overnight. How do I know we're about to go higher? We're about to go higher because once we lost this green wick, there is no need to come back up to here. So if you people really happen on this hourly candle, we ran this green wick and we came all the way up back up here. Bad work. Very, very bad work, actually. So this is bad. Actually, I remember it was an ugly delivery too, if I remember correctly, right? This is Wednesday. Yep, this is Wednesday in the daytime. I didn't like this. So let's highlight where that green wick is at. This is the bottom of that green wick. I said after we lose that, we shouldn't have retraced as high as we did. There's no need for that. What could have told us What could have told us that price didn't want to be super bearish that day? If you got caught off sides this day, you guys might have remembered, look, 9:30 is right here. Look, 9:30 opened up and we dropped off. So everybody thinks, oh yeah, the market is going to the dirt today. What could have not allowed you to get caught off guard when we rally right back up like that? Anybody? Anybody? Do y'all see what happened after running the yellow, let me zoom out one more time. What I said about this low, right? That's the low that the yellow line is on. We all looking, everybody's looking, we all paying attention. Nobody sleep. That's the yellow low. That's the green wick, my fault, that I put a yellow line on. Let's go back to the 1 minute. And let's look how price looked as it ran that target. Okay, what could have told you that price didn't really want to go much lower? Anybody? Indubitably. So Ms. Katrina says consolidation after it ran a target. These are things I've talked to the free community about, not just the mentees. Like I told you, to always be suspect. Always have your eyes open for big retracements or reversals. If we run a objective such as a liquidity target like that and we consolidate after, think of it like this. If there's a ton of stop losses at the yellow line, wouldn't they want to blast through that thing and stay way under it like that? They don't want nobody joining a up move. So if they start to engineer liquidity, which I put out a video on YouTube about some months ago about engineering liquidity, which is when they're basically baiting people to play stop losses somewhere. If they engineer liquidity, not doing it for no reason, that's because they're getting ready to snatch all that liquidity that they just engineered. And let's look even deeper into what this looks like on a lower time frame. Because on a 1 minute, y'all see it like this. But what about people that's on a 15-second? What is this? Stop losses. You got stop losses. You got stop losses. You got stop losses. Y'all see what I'm getting at? Right? So high frequency trading algorithms, there's a pool of buy side liquidity on top of each one of these highs, all the way down to these micro time frame. Don't ever get it twisted. Those are swing highs for a lower time frame. They didn't still show me the 5 second. I hope I don't mess it up. Okay, perfect. This is the 5 second time frame. Y'all can see this looks like some real swing high type vibes. Don't ever get it twisted on a 5 second swing high, swing high, swing high. This is exactly what I'm talking about. So they don't engineer this liquidity for no reason. They finna come get that. They're gonna so you don't want to see them engineer liquidity after running your liquidity target. That's the whole point here. So let's zoom back out. That's a 5 second time frame. Okay, so that's something that could have allowed you to not get caught offside. So when you see the rally come out of nowhere, you shouldn't be surprised. Because after we run the yellow, we should have made fair value gaps under that. But instead, we start chopping. Surprise, surprise, when you see this come out of nowhere. Oh my gosh. Dang, where'd that come from? I'll be talking to y'all about that. All right, so and then this day was ultimately trash after that. After that rally, I think the rest of the day was pretty uneventful, if I remember correctly. As last week overall was pretty uneventful. So we just pulling whatever gems we could pull. We trying to snatch it out of price action and so we can move to next week. Yeah, that was literally the day right there. Look. Where's that? This was the end of the day right here. This was what is this, Wednesday? Wednesday was trash. It was really nothing to talk about. So let's move on. Next day. All right, so I'm on the hourly time frame. Y'all see how yeah, growth only. I'm gonna get there. I'm going in order. We do have to do Thursday right now, so we almost at Friday. So look, so Thursday now. What are we talking about? Okay, so here's a couple things that made Thursday predictable. Because you guys may remember Thursday, we rallied hard. Y'all woke up and the market was up here. Y'all like, oh shoot, we about to go to all-time highs, and then boom, snatched your soul. Like violated you. That's what Thursday did. And how could you see that coming? So let's really talk about it. I'm back on the 4 hour. I'm on the 4 hour peep game. I'm on a 4. Okay, so this is when I knew that the market was not ready to move aggressively in either direction, and we're about to consolidate for the rest of the week. I said it to my mentees on what days is Tuesday. On Tuesday, I said if this fair value gap gets revisited, no, well, I said the opposite, but it means the same thing. I said if this fair value gap does not get revisited, NASDAQ is about to just rest in peace. Like, we might have to have a funeral for NASDAQ for real, honestly, if it doesn't get revisited. If it does get revisited, then they already know, like, that's just not a good sign. That means like the market ain't really ready yet, because this is not what the bearish move will start like. So you start learning the type of delivery that's expected out of the beginning of a bearish move versus the beginning of a bullish move. So that's why we study delivery, because the market is repetitive. And I keep saying that, CI, and people may wonder, like, yo, how are you calling price before it happens so consistently? It's because the market is repetitive. I'm not a genie, or I'm not a psychic or nothing like that. It's just learning, staring at these candles for so freaking long and combining all the concepts that I've learned with my own insights. People know about smart money and stuff, or they think they do, but I have my own discoveries as well, and that's what brings me to the level of precision. So I say that to say, like, typically this is not what it would start like if we were really ready to go down lower. So basically what I'm saying is this green candle that tapped into this 4-hour fair value gap told me, like, not feeling it. And on top of that, especially once we didn't make a fair value gap under these lows, I was like, oh yeah, it's over. I was like, this week about to be trash. So keep that in mind. Bearishness to me is already kind of destroyed. That doesn't mean we're not going to go bearish eventually. What I mean is this week, being that this is now about to be Wednesday, this week is going to do this to me. It's not going to go aggressively lower, and it's not going to go aggressively higher. So for the rest of the week, I already frame my expectations as low probability price action, sideways price action, no extensions to the upside and no extensions to the downside, because of what I just said. If we were bearish, we would have never came back to this. Okay, and now let's speak about bullishness. Like, yo, bro, how do you know we weren't bullish though? Because if we were bullish, I already talked about that at the beginning of the Zoom. If we were bullish, beautiful people, we would have never came back to this fair value gap on the hourly. Remember, we would have never came back to this. So the fact that we even came all the way down here, this is not what the market would do if we wanted to go bullish. Probability wise, that when it come down here to go up here, that's nonsensical and it's unusual. That happens, it happens. I'm talking probabilities, and we live and die on probabilities. That's all you could do in trading, is live and die on probabilities. So that's why I say bullishness been killed since freaking Monday or Tuesday, as we highlighted, and then bearishness got killed once it got visited. So to me, expectations was low. So now that you understand that, and this is what I mean by starting from the top down and getting the overall view of the market before entering the 1 minute and the 15-second. We don't just jump to those time frames, no. Right? We frame it. So now when you see the market open up and it does this is the hourly time frame. This is 7 a.m. This is 8 a.m. No, I didn't want to show 9 yet. Let's go 8 a.m. and price comes into here. All right, so let's notice a couple things, people. A couple things. We're moving higher here, and everybody's getting convinced, and they had like, yo, the market boom last night. It was so bullish last night. Yo, that's crazy. Everybody getting swing calls. It's up. Stop market printy. That's a fact. Shh, hold on. Stay patient. We come into a bearish PD array, which is this bearish OB. Bearish PD array. Now, what do we have under that? Are there any bullish PD arrays under it? Oh yeah. Hold on, I got one for y'all. How about this discount BISI? Let's highlight it just to write it. Let's say 1H BISI. Let's do that, and then let's also highlight this so we know what we're looking at. I don't want people to just. I know people are visual learners and all that good stuff. Ew, why that color look like that? Let's change that. Hold on. Let's just go white with it, and let's call this a 1H bearish Beasley. There it go. And then we got a 1H BISI. Beautiful work. Okay, so we have a bearish PD array and a bullish PD array. All right. Keep that in mind. Now let's continue. Let's continue with this dance. Now on this rally, what I noticed is there are basically no bullish fair value gaps. Now I know y'all looking at this baby fair value gap right here, but this is irrelevant. We ain't worried about that. That's irrelevant. It's small, it's insignificant. The move is choppy. The move up is choppy. What did I say? We look at the delivery, and the delivery gives you hints on what should be coming next. So when I seen this choppy delivery in the morning, and I'm at the gym at this point. Oh, and by the way, why was I at the gym at this point? Let me go back for a second. Because remember I told you about how we visited that 4-hour fair value gap, and I was like, oh man, the market's not ready yet. We still consolidating. I just had low expectations on Thursday's price action. I was like, I truly don't care at this point. Like, the market is not going in either direction. I'm not convinced to the upside, and I'm definitely not convinced to the downside just yet. And so I'm chilling. So at the beginning of the market, although I knew what would happen, I definitely was still pumping weight. But once I seen how the market opened up, I was like, dang, I should have just went home for this move. So let's see what happens here. So this is 855, 915, 2025. All right, so we get into this bearish OB. See price starting to break down. Now, I won't say why, but I'll say this. Once we failed this 5-minute BISI, mentees know the next destination. If I could ask a mentee to tell me your next destination would be, they would be able to tell me that. If they was brave, if I had a brave mentee that would come off mute, I know not everybody want that. It's a lot of people in here, but
discount.
Thank you. Discount. Appreciate you, Spader. My God. Automatically, by failing this, we know we're coming to the discount BISI, and specifically the lower half of this discount BISI, because it's the discount BISI right here. All right. Now, do we want the upper half? No. In this scenario, we're looking for the lower half. So off the rip, minimum, when we lose this BISI, we're coming right here. Minimum. All right. So I already know entering the market open, because this is what, 929. Off the rip, I already know we're coming down here. So a move is about to happen to the downside. This is when I start like rushing out the gym. I still had some more leg workouts to do. Some of my legs, I could use a little work on the legs. I might see a little bit of muscle here, but like my legs they need work. Okay, I be skipping leg days and stuff. It'd be stuff like this. I'm trying to get legs on, and the market start dropping. I'm like, yo, I'm out of here. Skirt. I'm looking at my phone. I see this big drop happening. I'm like, yo, I should have been home. Like, anyway. So the market starts to drop off right here. We're coming here next minimum. But why do I think? To me, I'm not looking for a bounce here though, right? Even though it's a discount BISI, I expected that BISI to get traded through. Why is that? Let's go back to the 5-minute and figure out. Look at that. See the 5-minute or the hourly. We go to which time frame could really show us the best? Right here. Yeah, same. The 15-minute could show it. Let me see if the 5-minute shows it. Hold on, I just want to paint a certain point for y'all. Yeah. All right, the 5-minute is fine. So remember how I told you guys about when we consolidate the fair value gap that we leave that consolidation with? We want it to remain open. We don't want to come back to this fair value gap that we leave consolidation with. So, and we're looking for the lower half. So I'm actually going to only put a rectangle on the lower half right now. Yes, price could come back to this BISI and go higher, of course. And I know you guys are probably looking at these fair value gaps and this fair value gap in the middle and saying, yo, Route, how'd you know we weren't going to use this? That's a mentorship topic. And we talk about which ones to ignore and which ones are relevant. The only ones that's relevant is this one and this one. The one in the middle is completely irrelevant. That's why I say we know if this don't work, we're going here. It's an if-then statement. If not the top one, we're going here. Minimum. Now, do I expect a bounce there? Let's see. My reason for not expecting a bounce there, once again, is if we leave consolidation, this shouldn't get revisited before we meet an objective. Y'all missed the most important part of my sentence. I know y'all did. So I'm going to say it one more time. We don't expect that to get revisited before we meet the objective. Before we meet the objective. We don't expect that to get revisited before we meet the objective. Before we meet the objective. Before we meet the objective. Okay, cool. Copy. Because once we meet the objective, it's valid to get revisited. At that point, we could go there, go here. But until we meet the objective, we don't want that to get revisited. We did not meet an objective here. Objective is an important concept. I wish I could say more. That's a class in itself. We did not meet the objective over here. So there was no need for us to come back down here just to go higher. So my point is revisiting this already told me, oh, we're gonna go lower. So if we're not using this, where's the next destination automatically? Running these relatively equal lows. So do you see how all of a sudden, by losing one baby fair value gap, you already could project a move this big right here? If you look at it from the 1 minute, you'll see this is a pretty big move just by understanding very specific things, repetitive things like price action. All right, so now y'all gonna see, yeah, oh my goodness, that's crazy, ain't it? Sheesh. And when we lose these relatively equal lows, when you look at the hourly, and when you look at the hourly, and I talked to y'all earlier about the delivery of the hourly, you can see how as we break down here, it gets pretty predictable that we're going to this purple area. So this is why higher time frame context is key, because if we're reacting to this OB, losing these areas, what exists under this to catch price besides this fair value gap? So the hourly already could tell you, like, okay, minimum we come in here. Now we could use this to go higher, of course. I didn't expect it necessarily, but we could use it to go higher, whatever. But minimum, you're gonna lose this area and come down here. So how do you predict a move from up here to down here? Well, everything I said, and if you notice, that's me talking about all the different time frames all at once. You see how everything's in unison. And so now check this out. How do you anticipate consolidation? I put this in the free community at the time, but when you have a bearish PD rate and a bullish PD rate, and both of them are very probable, that's typically where you see consolidation exist. So you now expect price to stay in this general area in between these two PD arrays, because this is where they tend to blow people's accounts at. All right, so you can see how we pretty much just stay right here, right, all the way through Friday, and to right this exact second, this is where we are. That's why we're in between this area. Price is holding the BISI. You can see all the bodies holding the BISI. As you know, if you've been paying attention to these classes, a fair value gap, you need bodies to hold it, not wicks. We're not concerned with this wick. Bodies are holding the BISI, and obviously we still got the rejection of the bearish OB. So why are we in between this high and this low? Because we're in between PD arrays. It's the perfect place to chop price up. And when I see that, and we're heading into Friday, do you see why I stayed cash Friday? Do y'all see why I stayed cash Friday? Why I ain't taking no trades Friday? Right? Since before the market even opened, we already said Friday about to be trash. I didn't take no trades on my main account. I passed the eval really early on Friday just because, like, why not? But I didn't trade my main funders and then like that money I cared about. I was like, just for fun, I'll do an eval or whatever. I just be doing them joints for fun. But I didn't want to take my main account in this. Heck no, it's just trash. Look at the price. It's self-explanatory. Look at what Friday was like. Why are you trading this? Where's your edge? Where's your higher time frame bias? That's another thing that can help you know whether or not you should participate. Do you have a higher time frame bias for real? Because I explained to y'all why the bearishness on the 4 hour is not ready yet, and the bullishness on the 4 hour is also not probable. So if we're not ready to move lower or higher, where do you think price is going? You're just guessing, therefore you're gambling. You have no edge. You don't know if you should be focused on bearish PD rays or bullish PD rays, because you don't know where the market is truly trading to right now. That's where you get chopped up, and that's where they do this stuff to you. Another thing is, man, what was the other thing I was gonna say about that? Man, lost it, but I don't know. spend time trying to remember. But yeah, like just know you gotta come into the market with a bias, and it's framed from the higher time frames down. Y'all can't just open up the chart on a 1 minute and just start trading. Like y'all ain't check nothing about the higher time frame. Just, oh, we going down, puts. Matter of fact, never mind, calls. Oh shoot, sells, buys, sells. Oh my god, like bro, be easy. Everything is. Don't treat this thing like a casino. Don't do that. It's a science to every part of price action. So if you got chopped up on Friday, I want you to ask yourself, what was my edge? Where did I have price going? Where did you have price going and why? Where did you have price going and why? You should always know where price is going at a time. And if you struggle with that, tap in with me. That's a specialty. And I prove it every single week for months and months now. Yeah, it can't be a coincidence every time. For months and months and months, we've called the top of NASDAQ last correction, and we called the top of it months ahead. We've done so much on different markets and different time frames to the point where it's like, okay, clearly we have a consistent way of knowing where the market is going ahead of time on different time frames. If you struggle to know that and you're not tapping in, but you say you're serious about trading, you need to question yourself: are you all talk? Because you'll rather spend a bunch of time losing trades, losing money consistently, being stubborn, like I'm gonna figure this out, not realizing that it's an opportunity cost. If it takes you 3 more years to figure it out when I could have told you this in 3 months, you realize that you just lost for 3 more years, which is way more than whatever the mentorship costs, way more. And it's also opportunity cost because you didn't take advantage of winning plays that you would have seen. So let's say, for example, you knew how to go short up here like we did. This whole drop could have more than paid for the mentorship, but you couldn't take advantage because you didn't know how to go short up there. Understand? So it's also, you got to factor that into the price. And all of a sudden, what you're doing is actually costing you a whole lot more money than whatever the mentorship costs. Take my words and apply it to someone else's mentorship that you might respect or something like that. But it don't have to be me. It really don't have to be me, but take it into, if you're an entrepreneur, a business conference or business mentorship or whatever, this applies to everything you're doing in life. You need to invest in the education because the opportunity cost is extremely expensive. But anyway, back to the price action. So another thing I want to show y'all here. Is this play. Last thing I wanted to show y'all from, this is Thursday though. This is Thursday. Okay, so we talk about consolidation. So when we look at these highs, I'm going to say these highs, that's at the top of this consolidation, right? And price made a decent little move to the upside, looking like it wants to have a breakout. You want to see what does price do when it leaves that. As we said, when we leave consolidation, we want to leave it with fair value, guys, right? We want to ideally do that. All right, well, it's not really doing that. Cool. It's not really doing that right now. What is happening for real? So this, when I'm looking for potential entries, this is where I come down to the 15-second time frame. I didn't take this play. All right, y'all know I'm always transparent with everything. I didn't take this play, but I was on Zoom with a few people that's in here right now, and those people I was calling it out verbally. Why did I not take this play? Because I was done trading this day. I had a killer day this day. This is Thursday. Even though I talked about going to the gym or whatever, and how I missed the trade, this initial trade. Yeah, the gym ain't that far away. When I got home, I definitely caught this whole drop. This paid me very well, and then this rally also paid me very well, and then I was done. So I was done for the day. And then plus, when I was looking at this, I was like, okay, thank God I'm done for the day, because this really wasn't that pretty. So I caught this drop after this retracement. Matter of fact, how did I know we were going to drop off? Not only did we come to a premium SIBI, but look at the delivery. What did I say about moves like this? My fault if I'm all over the place, but it's all coming back to me. What I say about moves like this, we always said we don't believe in those, right? So y'all know I like the 15-second time frame. All right, so y'all know I'm finding my entries in here as I see order flow shifting. As we break down, this gets very easy to hold, and you see we holding it to run these lows out, et cetera, et cetera. So money gets made on the drop. And then money gets made on the upside as well. I didn't catch the whole rally, no, but I caught a decent amount of this rally here, enough to allow me to finish for the day on all my fundeds there. All right, so and exactly, iPhone said expect a hard reversal. Correct, exactly. So we don't believe in the moves that move like that. All right, especially when they doing that into a PD array. My fault. Let me go back. All right, we moving like this into a premium civvy. Are you serious? That's like this. Y'all making it this easy? For real? They're gonna make it that easy. I guess I'll take it. Shoot, y'all gonna be that predictable for me? I will take it 10 times out of 10. All right, so yeah, so but I was just on there just for the love with a few people or whatever, and so I was calling this out, and I was like, okay, we see how price moved over the consolidation highs. Let's see what it do next. So price comes down, right? Goes up. All right, if we don't make a higher high right now, we're gonna break down hard. Why do I know that? Well, I want you to think about what this formation really is. This is the 15-second, and you're probably saying, yo, Rel, all I see is Christmas candles. Green, red, green, red, green, red. As a fact. Hold on, just check. 15-second. What about the 5-second? What do you think the 5-second look like? A failure swing. What is a failure swing? I mean, price attempted to make a higher high, but it didn't make it, so it was a failure swing. So after failure swing, I'm expecting a breakdown. Okay, I'm expecting a breakdown. So even though I'm looking at it from the 15-second, as I verbally said to them at the time, I said we had a failure swing here. I think we about to start breaking down. So when you see price lose these lows, these red lows, this is so surgical, son. And this is what I mean by we get really, but this is how we catch moves at the top though, y'all. Like if you want to snipe for real, this is what it takes. You're gonna have to really learn price on a deeper level. When you lose these lows, the lows that generated the failure swing, see? The lows that generated failure swing, especially losing it with a fair value gap. Hey, ain't this what we talk about? OMG. OMG, all of a sudden, you can see how we could catch a move from here with a 4-point stop loss, a 4-point stop loss with an 100-point profit target. A 4-point stop loss with a 100-point target. Crazy. How do we get a 100-point target? Because even though we're here on the 15-second and the 5-second analyzing the entry, the trade is based on understanding where price goes after this, knowing we go here and then knowing we go here next. Easy money, like very, very easy money. And it's also framed by understanding timing. Now, I keep telling you guys to look at times that moves typically start to happen. Without elaborating on that time, because I can't talk about everything. It's on the screen. I mean, that's all I say, right? So it's also a time-driven element to why I'm expecting a big move to happen right now. It's a time-driven element. I'm not just guessing. It's not a coincidence that we ran these highs at the time that we did. That was all I will say. It's not a coincidence we ran these highs and came back into the range at the time that we did. All right, so now, it's an easy hold without, we could watch it in the 15-second, I guess. But price drops off. This fair value gap, the people I was trading with, I said, this fair value gap, if we are truly bearish, we're going to run these lows, first baby target. We're going to run these lows before we come back here. Okay, easy, right? Why? Because that's what bearish delivery does. That's what I wanted the 4-hour to do. When the 4-hour, remember the 4-hour, it actually came back into it first, and I said, oh, never mind. Right, price is fractal. This fair value gap shouldn't get traded back to it before we hit an objective. Okay, cool, we hit that objective. Now we break down, and you can see we calling out every move up and down for this whole thing, right? For this whole thing, and class would be too long if I went into detail about every single thing, but just know there's a reason we targeted these lows. There's significance to these lows, not just these lows, not just these lows over here either. I'm talking about these lows right here. Mentees understand these lows are more significant than the other ones for a reason. And my hint to you is keep thinking about time. Everything we do has a time element to it. Okay, time element to those lows. So if you were a real student and you're in the free community, you would go back and you would check to see the significance of the time of those lows versus these other lows, and connect dots. All right. Now, price comes up into this city, bears OB, if you want to call it that, whatever, break it down. This is light. Price should be targeting there, but starts acting funny at first. But where price is going. Where price is going. So even though they act funny for a little while, you still know where price is going. Now, do you need to trade this? No. So this is what I mean by we don't marry destination, we marry delivery. Me, what I tell you guys about when we're this close to a clear target, if we don't use this, for example, this green candle, I'm out of the play. I don't care if we go there eventually. I don't want to be a part of none of this stuff. We should have used this green candle to go lower. Price should have done this. That's what should have happened. So when we invalidate this green candle, that's where I take profits at, personally. If it starts breaking down again, I might get back in, maybe, right? But this is what I would want to see. So this is where I would be instructing to exit. I would not be telling you to hold for this retracement up here. I would not be telling you to hold past that. No, we are way too close to the target to be invalidating PD arrays. No, we should be validating PD arrays that close to a clear target. All right. So yeah, I wouldn't even be trading none of this. It could go without me. Cool. And look, lo and behold, as soon as it touched it ran, right? So thank God we wasn't there, fighting this price action just for this baby little move. Because as soon as it touched the target, cough, objectives, right? Objectives. Need I say more? Every move has an objective. The market is not moving up and down for no reason. Objective met. Now we could fly. Cool. All right. So I see a question that said, a failure swing is when we try to create a higher high after running lows. It doesn't have to just be after running lows. It could be after tapping into a PD array. But yeah, it's really just the attempt at making a higher high or the attempt at making a lower low. So an example of a failure swing, for example, is right here. This is technically a failure swing because we put a high in the market, we put a higher low in the market. We tried to put a higher high in, but we failed. That's a failure swing. Then you see the breakdown. And so, yeah. Please tap into mentorship. There's so much I want to say to y'all. Y'all don't understand because there's more detail I want to give. So much more detail I want to give. But I swear nobody can ever be mad at me because I give so much already, bro. Y'all cannot be mad. All right, so that's that. And yeah, and you're welcome. All right, so are we clear? Can I get ones and twos? Can I get ones if you picked up something today? So far, have you picked up something with it? You can say that by putting a 1 in the chat. If you ain't get nothing from today, you can put a 2. You get nothing from today, put a 2. I appreciate the love, Tiffany. I met you as well. Appreciate you, Team O. Everybody, for real. That's love. That's love. Nah, I appreciate y'all and y'all time, for real. Thanks for tapping in week after week. So let's keep it going. I got a lot more. Not a lot more. I'm not gonna keep y'all forever, but I got some more to talk about. But I definitely appreciate everybody throwing the ones in the chat. So we picking up. We getting some value. Shoot, getting some value out of this. All right, so you guys can see why we started consolidating here. Yeah, because both bearish and bullish delivery is not what we want. Consolidation, trash time period. Got to be very careful trading in this range right here, y'all. Very careful. So let's keep it moving. And grateful for your presence. Grateful for your presence. I appreciate you, actually. All right, so appreciate you, Tiffany. I'll tell you, I wish I could, share so much more too. This is what I love to do. Miss Teresa said, come join us and get more value. Indubitably, a whole lot more. All right, so I'm gonna clean this chart up. Let's get over to here, to the next side. And let's keep it going. It's more to say, it's more to do, more to cover. All right, so there's a calendar. Okay, people. Part 2 of class. Most likely won't be as long as part 1, so don't worry. Nah, growth only. I spoke about Friday. I said Friday. I told you guys the reasons why Friday, before the market even opened, you already knew that there's no setups that's supposed to happen. There was no edge in the market. There was no bullish or bearish bias because of the delivery from the days before and the expectations set by the higher time frame on the days before. So entering Friday's price action, the reason why I didn't touch any of my main accounts or any of my real money or anything for the whole day, I didn't take one trade with my real money on Friday, is because of I knew Friday would be nothing but straight chop based on everything I talked about prior to. So I really broke down the whole week for y'all on purpose so you can know how leading into Friday, you can see why we was like, oh yeah, now Friday about to be super trash. That's how we knew Friday we were supposed to stay cash. Yeah, Friday, I wouldn't take no trades in that, and I don't recommend that. And it's irresponsible for me to even recommend trading inside of price action that look like that on Friday. You don't take no 1-minute trades, don't take no 15-second trades, don't take no trades. Don't ever trade without an edge. Don't ever trade without a higher time frame bias. Bad work. Don't do that. All right, so let's get into the economic calendar. Why do we go here? I got new people every week, so I got to say this. We go here because even though we know where price is going at a high accuracy, when is it going there? That comes to this calendar. So, for example, on the net, it's like checking the weather report. Exactly, Tiffany. So it's like, for example, on the NASDAQ, we came to the daily BIST that I told you guys about since August 25th. I told y'all I'm looking for price to reject that daily BIST, and y'all noticed we rejected it pretty hard at first. Then we came back to it. Then we rejected it again, and pretty much we've been consolidating on that daily SIBI. Did I say BIST? I meant to say SIBI. I meant to say SIBI, which is a bearish fair value gap. So there's a daily bearish fair value gap from July 17th. I think it formed on July 17th. I told y'all I'm looking for price to come there and reject on NASDAQ and go much lower, but it went there and it's been consolidated. So my point is, although I can see NASDAQ going down, maybe after election, who knows when, but I can see it going down pretty hard actually. I'm not gonna front. When will it happen? Largely it's gonna be dependent on something in this economic calendar, or it might be the elections, we'll see. So now, this week is not looking too hot. I ain't gonna front y'all. Fed speakers typically creates chop in the market. So Monday is looking dirt. Tuesday, Fed speaker, dirt. Wednesday, nothing that's major, nothing to talk about. Thursday. Thursday, all we got is PMI. Services PMI, manufacturing PMI. These events here only really bring a decent movement to the market when there's recessionary fears in the air, but it's not really much of a recession fear in the air right now. If anything, it's more of a fear about inflation. Like, is inflation going to spike again? Which technically can somewhat be seen through PMI as well. But still, like, it's nothing that's about to really shift the market. Hey, surprise me. Please surprise me, because I want some movement, but I ain't going to lie. Like, probability-wise, this is not going to shift the market. So nothing to talk about on Thursday and nothing to talk about on Friday. Consumer sentiment is not going to shift the market either. So this week is just low expectations, unfortunately, again. And you can see it in the 2-year bond, which we'll check out in a second. But let's go to DXY first, as always, because, this is also a good gauge of not just the Forex market, but a lot of times the NASDAQ as well. So, and 1242 said, classes are always filled with value. Love the back testing portion. I appreciate you. We'll keep that in mind and we'll keep that going for surely, and I'll try to make it better and better every week. Now for DX Wisely, all right, how did this go for us? So I know people be new, so I gotta bring people back because there's a whole story to this week after week. I don't know if y'all remember who been a day oneer with me. We were talking about price coming up here. We said, y'all don't remember this. We talked about price using this fair value gap to come to the highest body on the weekly, which is this yellow line. It touched it to the exact tick. That was our target, to the exact tick. And then after that, we talked about the breakdown. Talked about price using this fair value gap to go lower. We talked about price using this fair value gap to go lower. We targeted this yellow line, this sell side liquidity. We got there. Based on the manner in which we got there, though, we could anticipate a retracement. This retracement at the time, though, we were looking for it to come here. We wanted this. It fell short. So we didn't necessarily, we knew a retracement was coming, but we wanted it up into this gray area, didn't get there. Then it consolidated, which is what? After running a target, you see the yellow line, what we talked about. After you hit your target and then consolidated, always a bad sign. Be prepared for something. Look what happens after. So now this rally, as it was pushing up, what is this, Wednesday, Friday? Okay, so the week opens up and we start pushing up. And so we get the next analysis that I said is, all right, look for price to come here next. So we're targeting this weekly SIBI. Voila, magic. All right. Voila, magic. Look how we got there. Look what happens when we get to that weekly SIBI. All of a sudden, the 4 hours start looking like this. Just all of a sudden. So we had this strong push, like from the bottom, right? We start talking about price coming to this gray area from over here. This is the 4 hour chart. As soon as we get there, all of a sudden, there's objectives, right? Objectives. Now, does that mean I'm looking for this weekly SIBI? I said this at the time too. Am I looking for this weekly SIBI to send us to new lows? No. That's not what I'm looking for. I'm just talking about a reaction. That's why I said it's a good place to target, to take profits at. It's just a reaction. Now, where could we go after this reaction? I would not be surprised to see DXY if we could lose this initial BISI. If we could lose this initial BISI, which I think we will. I know right now we're getting a little bit of a reaction to it, but I don't think it's going to last. All right, so if we could lose this initial BISI, which I think we will, I think DXY is going to make a deep retracement this week into this BISI that we already used, but I think it's going to use it again. So wouldn't be surprised to see DXY do this right here, like that, and then continue his journey to the upside, which could cause some movement in the Forex market this week. So I'm looking to see that. If we keep pushing up, cool. As I just showed you guys, I'm still largely bullish on DXY. I just think it's time for a retracement. And where will it retrace to? I'm looking for it to retrace to this area right here. Most likely to the lower half of it too. So I think it goes lower half. I think bodies will hold it. Even if it wicks under it, I think bodies will hold it. And then we should be able to come to the upside. But a lot to be seen, right? I got to see how are we getting there with super SIBIs? Then I'll be, hey, I don't know. A lot of them, if it's kind of like steadily moving down there, and it cool. You know, that's what I kind of want to see if I expect more upside. But yeah, I'm expecting a retracement there. Anything else I want to say? I mean, obviously, like I said, if we use this initial BISI, then if we use this right here, then it is what it is. We continue the uptrend, but that's my expectation if we do lose this initial BISI from the daily chart. We lose this initial one from the daily chart, all right? So we will keep our eyes on DXY for now. I just think it's retracement time. So all I'm doing is calling for a retracement on DXY. Why am I doing that, by the way? It's the movement after touching this BISI. So I told you guys about bullish sentiment. When we tap into a BISI, we want to see BISIs created after effect. Now, I know you may look and see very tiny fair value gaps, like this tiny one and this tiny one right here that we were talking about. But to me, that's not enough. And that's why I anticipate it's time to kind of take out that area and come back into this inefficiency. No, I don't trade Forex anymore. I do this because I have Forex traders in here. So I try to give them some direction so they have a bias for their trades, basically. But I largely just stick to futures these days and options. But I chart Forex pretty accurately for everybody every week. So I just want to show you guys that like the stuff we trade in every market applies to every market. Well, the stuff we trade applies to every market, rather. So even the bond market. So the bond market, we called this whole drop that came, and then we've been consolidating here. So you said, so just seeking destroy conditions this week. Largely, that's my expectations based on the economic calendar. I hope not. But I do, like I said, for DXY, I do expect a retracement though. I think it's time to retrace. We will see. We got to our target. I liked this weekly SIBI as a target, as an upside target. It can definitely cause a retracement into this BISI on the weekly. It's probably hard to see, but if y'all can see, I'm on the weekly chart now. right? So the same BISI I talked about on the daily, it overlaps a weekly BISI right here, right? It overlaps a weekly BISI. So that's why you could look at it and say, oh, we're gonna come back to that daily BISI, or you could say, oh, we're coming back to this weekly BISI right here, right? And we will use these red candles as a bullish OB, basically, is how you can see it, especially if it wicks down in here, because it could wick down in here, but bodies hold that. So it's very possible that we could like come down, you know, the daily wicks here touches the top of this red, but bodies hold the purple area, and we push up. All of that is possible and something that will not surprise me at all. But we can use these red candles as a bullish OB on a weekly chart. Either way, I just expect more upside on DXY. I just think it's retracement time. Now the 2-year bond. Oh, and you said the push out of the BISI wasn't convincing. Yeah. And so yeah, you know, I remember this dropped off, and I said I'm still looking for price to use the lower half of this SIBI to go lower, but it's just been chopping here ever since. So I still think we're going lower. I just think if we push up, it'll use the lower half of this SIBI. Probably do a move like this to go lower. I'm looking for that on the 2-year. What's next? Let's go to a few forex tickets, and then we'll go back to futures and options. So euro. My analysis on euro to speak. Just because you see DXY, I'm expecting a retracement. That should make euro go bullish. So what did I have here? And my bad, I made this on Friday, so some stuff be a little bit blurry in my head when we start recording. So what did I draw here? I clearly drew a SIBI from the daily. Yeah. Okay, yeah. So for me, I'm watching this SIBI on the daily. I don't think we're going to reject it. I don't think this is going to happen, but it's a possibility. Now, if we do break above it, we may quickly use it to go higher on the other side. All right. And I would look for price to come into this area, this 4-hour SIBI that we initially used. If you guys remember on euro, you see this long red candle on euro. You guys remember how this happened? And then on Sunday, I said, I'm looking for price to come here, and we're going to use it to go lower. So we sniped the heck out of this, did we not? Did this not deliver pretty nicely, right? Okay, well, I think it's time for a retracement, probably back into that same SIBI. Because why am I thinking it's going up there? Look at the movement. We don't usually engineer liquidity for no reason, and I think it's time to retrace. So if we're going to retrace, it's likely to me that we're going to take out this whole area and come back into the same inefficiency, honestly. Probably come slightly above these highs, maybe sweep it and come back lower. Definitely a possibility. Bold statement though right now. We need to see some things develop, including daily chart, including on the daily chart, and validating this initial SIBI. Because if we invalidate this, I kind of like this strong move back up. All right. So we'll watch that on euro. We swept these lows here on British pound, looking for price to make a push into this daily SIBI. All right. So once again, just retracement time. I don't like this if I'm bearish though. I will say that. And I am. Let me see. I'm pretty sure I was bearish on this ticker for the time being. It's at a crucial area. I'll say that. It's at a crucial area, but I think it's just going to make a move like this, honestly. I don't like that delivery if I'm bearish, I must admit, but it's very possible. So we'll see. But either way, if DXY makes that move lower, I expect British pound to target that SIBI. So keep your eye on both DXY as well as British pound. If not, they just continued a higher time frame trend, which is cool. I'm bearish on this ticker. I'm bearish on euro. I'm bullish on DXY. Right now, I'm talking about the potential for a retracement. So I'm just planning for a potential retracement, especially because the later half of this down move looks like this, just like euro. I don't like when price moves like that. I told you guys, every time price moves like that, especially if we do that into an objective, see, objective, especially if you do that into an objective, I typically see retracements happen after that. So you see why my analysis is that this week. I just think it's time for retracement. That's literally the reason why, but we will see. New Zealand dollar. All right, last week's plan on New Zealand was to use this green candle to go lower. See, Thursday candle, Friday candle is the green one. So on the watch list class, which is on Sunday, I said, I think we're going to use this to go lower. Clearly we did. We made a lower low. Did we go under it for real? Did we go aggressively under those lows? No. So what do you think I'm predicting? Just like the other dollar pairs, I'm predicting a retracement. So I think we come back above, and we may actually end up coming into, hold on, let me see something. Oh, and simultaneously, my fault, I wouldn't be looking for this to create new highs or nothing, but you can see, by the way, that move down tapped into this weekly BISI. I forgot to say that. It tapped into this weekly BISI, by the way. But I don't think it's going to generate new highs, though. Like, I don't think it's going to make a new high on this ticker. It's just going to send us to, like, probably this SIBI or the lower half of the SIBI above it. But I think we just make a retracement this week, and then I think we continue back to the downside. All right, so that's my expectation here on New Zealand dollar. It's a little hard to target where the rejection may come, though. Like, if I had to say, I would target this, the SIBI from Friday, October 4th. If I had to say, I would target that SIBI as the rejection, though. All right. So that's that. Almost done with Forex. 2 months. So this ticker here, I think, is going to make a retracement as well. But I want us to study the delivery on this real quick. So this is for learning purposes, whether you trade Forex or not. So how do we call this whole move? Honestly, should I start from the beginning? Because I feel like it's a good teaching point real quick. So let's actually go there, because I know that I got some new people here and stuff like that. So really, we had this very probable bullish OB. We want price to hold the upper half of this bullish OB. We didn't say this in hindsight, we said this at the time. So price consolidates the heck out of this bullish OB. This is called time distortion, which is largely when we consolidate on a very probable PD array, just wasting time basically. So you just consolidate on it, but it ultimately is going to work out. So as I told everybody, I said, I think this bullish OB is going to work out, even though we consolidate on it for 55 years, because if we really were bearish, trust me, bearish move ain't going to start like this. It's just unlikely, especially not when you're doing that into a beautiful OB. So no, this is just a time distortion type scenario, and we're going to run it out. So that's how we knew this OB would send us higher. All right, so that's one thing. You can take what you can from that. Now, another thing is, in the manner in which it got there is, I know you see a lot of green candles, but it's wicky. It's lacking BISIs. There's a couple small, bullish fair value gaps in there, but it's definitely lacking. And then we get to an objective. All right, so if you guys remember, you see this doji candle at the top, this Friday candle. Yeah, when is our watch list class? On Sunday. So that weekend, I said, I think we're gonna run the yellow line, but it's gonna be a big sweep. Why did I anticipate a sweep? Because the manner in which we took that liquidity was way too staggered for me to expect to not see a sweep occur. So after we ran them highs, you've seen what happened. So that's how we called this whole breakdown. I'm like, okay, cool, big breakdown coming on USD CAD, and I'm expecting us to come under the OB that we initially used. Now we're gonna go under it because that's now liquidity. Cool, ran under it. Now we popping up, and we have this consolidation time period. So then take what you can from how we called the drop. Now let's talk about the pop again. Let's see what gems we could pull from that. So very tricky time period to trade this. It's a daily chart, very tricky time period. There was a weekly SIBI here. Let me show y'all right quick. There's a weekly SIBI right here that formed the price action. We could use this to go lower. Price comes up, bodies hold the 50% of it, we come down. All right, if we're going to, and this is something we were looking for potential rejections on, if we are going to go lower, we are not going to we're not going to sweep this low, and that's not happening. It's just unlikely. It's just very unlikely, put it like that. So when I see us sweep these lows and come up, I'm like, oh, big pop coming, big pop coming. So What was our plan after seeing this? This is Wednesday, Thursday, Friday. Okay. So our watch list classes is on Sundays. So we called for USD CAD to come up into this wick. And also, first of all, it was making its way there, but now you see this is Friday as well. Look at this circle. This circle is a Friday candle. So what did I say on that class? I said, now that we can tell we're coming into this wick, we don't want price to use this fair value gap. Why? Why do we not want price to use that fair value gap? Because if we're going to make an aggressive move into this target, we don't want retracements into a PD array if we want to see a certain bullish delivery. And it's very similar to what I said about on NASDAQ with the 4-hour candle. I didn't want to see that get revisited. That's a sign to me that the move is not ready yet. So we were looking to see if price does not come back to this fair value gap on the daily, which it clearly did not. It never went back there. Check mark. And then we came here and I said, if we move past the halfway mark of this wick, then it's going to make a much deeper move into this target. We targeted this civvy. This was our target on the upside for USD CAD in the short term. So you can see how we caught this whole rally, every bit of it, right? Analysis, while I'm not saying, I hopefully you guys, my Forex traders was able to take it, but I'm just talking analysis while you can see how you can see this coming. This applies to every single time frame. Yeah, every time frame. Price gets here and all of a sudden it starts, reacting. Now that brings us to this current time period. What's expectations here on USD CAD? Based on this reaction here, I also think this is going to have a retracement. I don't think that we came down here where there's no PD array right here largely to make a higher high. I think this is just consolidating for a second and then it's going to break down and it's going to come into this BISI right here. All right, this BISI, I think we go long from there again. So same thing, I'm expecting a retracement here. I like this BISI as a place that it'll bounce. Basically, I'm looking for daily bodies to hold this BISI. So this little pop that we experiencing, I don't think it's gonna last. But man, I mean, look at the nature of it too. I don't like moves that look like this. I can expect this to be a failure swing, wink, wink, right? I can expect this to be a failure swing, and then we push down into this daily BISI. This is the 4-hour chart now. We'll see. But to me, this low right here that they just generated, I think they engineered liquidity here. I think this is a fake low. I don't think that's a real low in the market, but we will see. We will see. I'm bullish on this ticket in the long term, but in the short term, I just think it's time for retracement. That's really like largely what I'm seeing here on Forex. And last but not least on Forex, same thing with USD JPY. So you see I have this highlighted. I'm looking for price to sweep all of this liquidity and come into this bullish OB here to go long from there. This is another ticket we've been highly accurate on, especially after catching this sweep on these lows. We called it into these lows. Now it's look at the movement. What do we say about moves that look like this? We don't believe in them for too long, right? Expect a big drop. So will that big drop happen now? I think so. If not, it'll go up a little higher and then it'll drop. But I just think that it's time for a retracement. My mother is calling me. I can't. I get a text to tell her, hold on, doing class. Can't ever ignore moms, y'all. Ever. All right, so that's that. That's that. And let's move back to listen. Actually, matter of fact, Bitcoin has been moving. Let's talk about Bitcoin for a second. Yeah, this thing has been on a tear, right? It's been on a tear. Do I believe in it though? No. I know Bitcoin moving, but do I believe in it? Nah. I ain't gonna lie. So for my crypto people in here, if you guys know, we've been bullish on Bitcoin as long as it holds this weekly BISI. But I have early indication. Yeah, this is the weekly bit. So it's a weekly BISI overlapping the monthly one, right? We were focused on the weekly one, but they overlap each other. So there's a monthly one, there's a weekly one as well. We look for bodies to hold it. So as long as bodies hold it, I'm good for it. It held the monthly one as well. But like my point is for Bitcoin, even if we run all-time highs, I don't think it'll last long. I think even if it goes, I think it comes back in personally. I don't even know if it'll get to all-time highs, to be honest with you, especially because on the daily chart here, what I said about moves that look like this, I just don't believe in them. So I can see Bitcoin coming right back down into here. right back down into this inefficiency right there. I will look for price to come back in the head very soon. But what I would look for to tell me that move is coming will be a shift in order flow. You know what I'm saying? So look how it's moving on the 4 hour. I just don't. But moves look like this and never last for too long. So, you could ride this uptrend if you want to. I just wouldn't. If it starts to get super energetic and I see Bissy's coming out and they not getting revisited, and all right, we could talk. But for now, if it look like this, I'm anticipating price to come back in. I don't play move. I'll miss out on FMB. I'll tell y'all right now. Peep this. If Bitcoin do this to 2 trillion, they gonna get all 2 trillion without me. I promise you. If it do that to 2 trillion, I don't do moves that look like that. I'll tell you right now. So I can see us coming right back into this range and still BSing until the NASDAQ is ready to make its move, because they're gonna move at the same time. So as long as the NASDAQ is kind of BSing, I expect Bitcoin to BS as well. Same thing with Ethereum. No need to go there. Now back to the NAS. Speaking of, why I write this so big? Because I knew I would forget to say it. So yes, on the NAS, I might as well say it because I'm clearly yelling at my own self. There has been no daily fair value gap since September 12th. So if you've been struggling in this time period on the NASDAQ, don't feel too bad. You're trading very low probability price action with no real energy. Fair value gaps are not just used for bounces and rejections. It's also used to help you determine what the true market sentiment is. So if there's no fair value gap, that means that there's a lack of energy in the market. It's like that's the real volume indicator. Little do y'all know. You don't see no indicators on my chart, no volume, no none of that, right? I don't need it. I don't need to see that. I don't need to see none of that. Fair value gaps tell me more than enough. More than you guys realize they tell me. There's so much to fair value gap. I could do an entire mentorship on fair value gaps alone, yo. So being that there has not been a fair value gap since this little one right here on September 12th, and you see the nature of, look at the 4 hour, you see what we've been trading here on the 4. You mad that you struggling in this time period? I wouldn't be mad. What I would be mad about is your lack of discipline in this time period. That's what I would be mad about. Not necessarily your technicals, more than your discipline. That's how I'll be mad about if you've been struggling in here. But yeah, so that being said, I think that price has a chance to trend pretty well to the downside, at least for a little bit under these lows. I drew it from these lows because we made a higher low, and I want you to peep that. Notice that this low on the right is higher than this low on the left. I expect price to take these lows out very soon. This move up is very choppy. I told you I don't believe in stuff like that. We may come in. We may not run these highs, this red wick. I think we may reject somewhere in this area and start making our way down. Very possible. But ultimately, do I try to determine chop? Do I try to determine consolidation? No. Because every PD rate and every expectation inside of consolidation is lower probability. And being that I trade based on probability moves, I'm not confident in low probability price action. So I just simply stay out of low probability price action. So being that, as I explained to y'all in the first half of class, why the bearish and bullish move are not ready to me yet. So if this overall area is low probability, anything I say in here is like, I take it with a grain of salt. But something that is very possible is rejecting inside of this red wick and finding our way under these lows and under these lows and coming down in the head. When we lose these lows, I think it could be pretty nice. If we should lose it with a fair value gap, honestly, on like the hourly or so. But when we lose it, I think we start making our way to the downside. All right. That can happen. It's just so tough because, and that's what I mean by timing, y'all. Like, I feel like they want to move the market when the election happens, but the election is not for like a couple weeks, right? So it's like, how long can they keep us in here? I don't know. Like, price action really, like, I really feel like we want to break down, y'all, but it's like, how long will they do this? Because we could come above here and then come right back in. So it's just a very tough area. And I think it's pretty obvious. Look at the daily chart that it's a pretty tough area, as it's been no consistent movement. It's like We have a green day, red day, green day, red day, green day, red day, green day. That's crazy. Almost, it's like opposite colors every day almost, with a lot of dojis and long wicks and lack of fair value, guys. It's a very tough area. We're still holding our PD array as we wanted to see. This is what I was talking about, how we targeted this since August 25th. And then we got there, dropped at first. It was good, came up, dropped again, and then now we kind of just still here. We'll see. The prediction I was talking about from August 25th was that NASDAQ will make a lower high. NASDAQ will make a, what the heck, bro? My fault. NASDAQ will make a lower high, and then ES, meaning the SP 500, will make an all-time high and then come down. So far that prediction is still playing out, as ES definitely made their all-time highs. NASDAQ definitely made a lower high, which is a divergence, SMC divergence. But we haven't really dropped yet, so we'll see. We'll see. Do I believe it moves that look like this? It's like clockwork, right? So yeah, I see why I anticipate a big move to the downside potentially coming. It's just, it's iffy, and I'm cool. I'm cool either way, and money will be made either way, because based on our signatures, we know how to adjust. So I don't know what this is. I don't know what that's about. Why are those down there? I think I was doing a one-on-one with somebody. My fault. Yeah. So like, and when we make this move down, God willing, we can make this move down. This Bitsy, I would not look to go long here, y'all. Even if we react, it'll get shorted. Okay, it should get shorted, and we should run those lows, and it should be honestly, this could be a pretty big move. I'm not gonna front. So I don't believe moves that look like this. Stay tuned. All right. Yes, same vibes. The only thing I would say is last week we were looking for this Bitsy to send price higher, and y'all can see that not only did it do it the first time, but it ended up doing it the second time as well. So shout out to people that were able to catch this move, because this was last week's prediction. Price coming into this Bitsy. We talked about price holding the upper half of this Bitsy. We're very specific here, and it played out. But you can see the movement, and you can see why I say wouldn't be surprised to see price find its way back to the downside very soon. Same thing with the Dow Jones. We talked about price using this Bitsy to go higher on the Dow Jones as well. And let me go back to the ES, my fault. For ES, if you remember last week's analysis, I said if we don't use this Bitsy, it's going to go down much lower. So you can see the importance of this Bitsy. Not only did we use it once right there, but we used it twice, right? We used it both times, because this Bitsy was very important. If we're bullish, we need to hold that Bitsy. It's the last thing that the bulls have hoping. After this is over with. It would have been over with. So yeah, you bulls got real lucky. Real lucky. And same thing with the Dow. Y'all got real lucky, because this was also extremely significant. But notice that we picked the good PD arrays, right? We picked the right fair value, guys. We know which ones to ignore. We know which ones are significant for a reason. It's a whole science to it. It's a whole science to it. Not much I want to say about the Russell. Still ultimately just in this overall higher time frame range. Not a fan of this price action, so I don't trade it. Like, the monthly is self-explanatory. Self-explanatory, not messing with it. This is just like the NASDAQ here when it comes to the Nikkei. Same PD array that I wanted the NASDAQ to reject on, this premium SIBI. I said that I wanted the Nikkei to reject on. Same class from August 25th. I was talking about the Nikkei rejecting this weekly SIBI, and it continues to do so. It rejected it once, came back to it, rejected it again. It looked just like the NASDAQ. First rejection, second rejection, consolidation. All right, so we'll see what comes next. I think when this goes down, NASDAQ will go down. I think they're going to move in the same direction largely. They're doing the same thing. They both real choppy. They both haven't made fair value gaps since in September, middle of September. And so the up move is very suspect. We'll see if this thing wanna break down. I will watch for, in the short term, fair value gaps existing under these lows. Fair value gaps under these lows could anticipate a move coming down in the here. So you get a fair value gap under this yellow low right here. I'd anticipate price making its way down into there. Yeah. I would target this after that. Honestly, lowest body or something, but these lows look good. If we could get aggressive movement under this yellow line, if it just wicks it and come back at stake highs. But if it does that and then it does this, we talked about that setup earlier, right? We could go short under here, but we shouldn't come back above the lower high, right? Yeah, but yeah, there you go. Whole lot of. We almost done. We better finish in a little bit. Let's go to CL oil. So oil. What was he saying here? We picked the best targets. I think this got moved though. Let me see. Set. Hold on. Be adjust. I think it was be adjust. I guess be adjust is off when we charted this, but I think we were looking. Nah, hold on. Why it look like that? Maybe I just moved it. I meant to put this here then. Okay, I guess that I must have moved the yellow line by accident, but this is the buy side target. We targeted, we ran it. Objectives are met. Right after objectives are met, we have movement. After objectives are met, now y'all see what? Failure swing, big move down. Yeah, we like that. Failure swing, big move down. Same setup from the lower time frames. Where to next? Where to next on CL? So technically, CL is supposed to move lower this week. Technically, it's supposed to move lower into this green wick minimum. But based on the higher time frame, everything is lower probability because we're in higher time frame chop. There's no consistent delivery in the higher time frame. So although we're technically supposed to move down here, the order flow on the inside of the consolidation is not convincing enough to me. Right? I would need to see us really make fair value gaps to the downside, either leave them open or use it and make another one. I need to see some real delivery that shows me, okay, we're ready to break consolidation. Because right now, we're in a weekly and a monthly consolidation. So what I need to see is the daily chart using bearish PD arrays. The daily chart's not really doing that. It's just kind of lollygagging. So I throw this ticker in the trash for now until I see what I like. Now gold. Come on, y'all. Who trade gold in here, man? Who trade gold? Listen. Let's really talk about it, y'all. I ain't gonna lie. Prices right here. We say, yo, price gonna consolidate, but the next place is going is the lower half of this daily BISI. Price, we called the consolidation before it happened. Price gonna consolidate in here, but it's gonna come to the lower half of this daily BISI. And based on the fact that it consolidated into the target, we anticipate what? An aggressive move out of the target, right? Isn't that what we said? And we drew this in class. This is the exact arrow we drew in class. Cool, that was 1 week. Then the next week, which was last week, we talked about what price was here, right? During class, price was here. I said, I think we're gonna use this red candle. This is the last thing the bulls can use to go higher. We should use this to make all-time highs on gold. That's crazy. It's like a lucky guess every time, ain't it? And I'm not, please don't take this as me bragging on myself. It's me bragging on the information that I share with everybody. I love this game a lot. It's so fun when you know what you're looking at. Like knowing what price is going to do beforehand is really fun, and it makes you look at the world different because people will blame this rally on gold, you know, on some type of news or some macroeconomic news. Like, stop it. It's just price action. All that stuff is noise, bro. It's gonna do what it's supposed to do. We talked about price coming not to the upper half of the BISI, the lower half of the BISI. We talked about price using this red candle to go higher to run all-time highs. You talked about it being an aggressive move as well. You can see straight green candle. Come on, man. How we knew that? Because of the way we felt into it. It's repetitive on all time frame. I'm trying to tell y'all, this stuff is just fun. It's just fun. It's like I get excited and passionate because I love this stuff, bro. And when it delivers, it never gets old because it's like, yeah, it's really that. It's really that. So it's in front. So where to now on gold? I'll let y'all know in the chat if I remember where to now on gold because we're at all time highs, and I've been pretty good with predicting all-time high targets as well, but I just don't want to do that on the Zoom. I don't want to do that on the Zoom. I actually, to be honest, I should have did this before Zoom, so my apologies. I usually give y'all the target before Zoom. But gold, you know, it's been pushing, it's delivering. I would say be careful. I would say be careful trading it based on this, though. Look how it's moving. You know? You see what I'm talking about? It's a 4 hour, so I would say be careful and watch for shifts in order flow. Potentially coming back into at least this inefficiency minimum, you know. So you know there could be retracement opportunities. I will watch to see these lower time frames, the 15, the 5, start to really like show invalidation of bullish PD rates that exist, which there's really no bullish PD rates here anyways, but also making bearish PD rates. If you start making bearish PD rates and slash or respecting them, yeah, order flow has shifted bearish on the lower time frame. So then you start targeting higher time frame PD rates such as this. So what I'm saying is, let's say price is gonna come right here. Let's say price is gonna come right here. You'll notice that on the 15-minute, it will show you first, and you know where the 15 minutes should head to minimum. It should at least come here. Will it go higher? I don't know. You'll see. You'll see a reaction. We'll see what's up. But you could at least target this area once things shift on the lower time frames, like 15, the 5. You know, see them things break down first. It starts from the bottom up. Then, so yeah, and shout out to y'all in the chat. All right, so last but not least, just SPY and QQQ. Same thing I said on ES. Like it's suspect to the upside. It's low probability price action. Last week's plan was looking at this 4-hour BISI on SPY. Right, this is last week. It's Tuesday, Monday. Yeah, I just don't want to get it confused. Yeah, this BISI obviously worked out, sent the price higher. Okay, good job, but we consolidated. Not a fan of the price action to the upside at all. It's a whole lot more interest to me to the downside, so I just get really wary on upside delivery here. We initially rejected the gap we had on QQQ. QQQ coming back above this gap makes me feel that it does want to run these all-time highs initially, but it will be a sweep. But I don't know. We'll see. I don't feel like it'll last, basically. If it run it, I feel like it'll break down, but we'll see, man. It's a very tricky area. I'm just telling y'all, how do you trade tricky areas like this when price is moving? You either, one, don't trade. Two, you could wait for a setup that you like, such as like I said, like, you know, fair value gaps forming and respecting PD rates. But really, what I look for the most is invalidation. So what I mean by that is probable bullish PD rates. I want to see them get invalidated. So let's go back to SPY for a second. Like a probable bullish PD rate is this 4-hour BISI. So although SPY has a lot of interest to the downside that I like, we still have to get past this 4-hour BISI. You understand? So when we come here and we use it, I'm just like, all right, it's not ready yet. Simply put, it's just not ready yet. Now, if there's another bullish PD rate, which there isn't, but let's say there was one right here, this is the next test. And if we fail this, my eyes are open. Okay, oh shoot. If we were bullish, that would have worked out, wouldn't it? And it didn't work. Are we bearish now? My eyes are open. Next thing you know, we retrace. What do we retrace into? A bearish PD rate. Oh shoot. We just used a bearish PD rate. Now I know what's up. We shifted. So now I'm getting involved and I'm finding bearish targets. Oh, we coming for these lows next. You understand what I'm saying? So that's how I play time periods like this. It's a patience game. Don't just look for creation, look for invalidation. All right. So that being said, I'll leave y'all with that. And if you're watching this on YouTube, definitely like the video, subscribe to the channel, of course, because there's a whole lot more value coming. But more importantly, I want y'all to go in the description box and click the free community link so y'all can tap in with me on a daily basis. And it's a whole lot more value in the free community than it is on this YouTube right here. And join the mentorship so you get the ultimate source. Because to be honest, what I talk about for free is probably 10% of what I know. And if only y'all knew, I'm not exaggerating. I'm super not exaggerating. So please tap in on the mentorship. That will change your life. I just want to share. It really hurts to not share everything. That's why I'm like, yo, tap in for real. It's a matter of me wanting to share. I don't really care about y'all money like that. So with that being said, tap in on me, yo, and that's all she wrote.